Okay, you mentioned while we were preparing for this that one of the things that it's important for business owners to understand is the value of having insurance policies for their loans, right?
Yeah, I did bring that up because you're in the loan business, okay?
Mm-hmm.
So let's say you're a young guy, 55 years old, you take out $2.5 million from not so hard money, and you're going to use it for 36 months, okay? It makes a lot of financial sense, not only to the lender, but also to the consumer who's getting the money to help them and the business owner to expand their business, because it provides safety, peace of mind for both parties. Say, so you take out $2.5 million and you only need it for 36 months. Those 3 years go by fast, but a lot of things can happen in 3 years. You can have a heart attack. You can get hit by a bus. Things happen. Okay, we just don't know when they're going to happen, but you might as well be prepared. So let's say this person who takes out $2.5 million and we give them a $2.5 million life policy with living benefits. It has to have living benefits to work the best way. And it doesn't cost very much more than regular term, okay, or a regular whole life, whatever you want to buy. It's your decision. But let's say they get into a situation they have a heart attack. And it's pretty mild, so they're going to pay out 25%, 30% of the face value. That might help them keep their household going and keep paying you because their business is going to keep going. Or they can say, listen, here's the balance of what I owe you. This, instead of being 36 months, I paid it off in 18 months. Well, it's good. It's a win-win situation. It's good for both parties, right?
Mm-hmm.
They got their money, got their business expanded, the family's happy, they're going to continue that business. You're happy. You don't have to sell that piece of property after you foreclose on it because that's not your purpose. You just lend money. Pay me back, and we're good. That's important because it keeps both parties viable in the business and also keeps you flowing with your business. So you got that paid off. Now you can lend that same money out to somebody else.
Sure.
Okay.
Right.
And all those benefits are tax-free.
And do you know, are there some lenders like SBA programs, for example, that require it, or is it just a recommended best practice?
The SBA, the Small Business Administration, most loans are requiring life insurance now.
Okay.
Okay, because again, they're holding the bag and they're lending money out to somebody. If they get paid off with their life insurance, more the merrier. They can pass that money on to lend it to somebody else.
Mm-hmm.
Because beforehand, they would ask for life insurance for loans of $1 million or more. Okay, but there's smaller loans too. Might as well take it out. It doesn't cost that much.
Mm-hmm.
A small cost prevents a lot of problems.
Right. Now, there could be some business owners that can't qualify for life insurance for health reasons or something else, right?
That's right.
And
That's the exception, but there's also a way of doing that as well, where you can buy a simplified issue policy.
Okay.
That makes well qualify for a smaller amount, but something's better than nothing,
Mm-hmm.
right?
Right.
Or put some money away from that loan into an annuity. Just put it back in an annuity, earning a decent rate, okay? So something happens, they tap into that before defaulting on the loan.
Mm-hmm.
At least 6 months of payments, maybe.
Right. Yeah. And that's how they could look at it. If they can't get the amount of insurance to cover the entire loan balance, well, then they could at least get a smaller policy, perhaps, like you said, a simplified issue policy or a guaranteed issue policy that would allow them to at least cover a period of time while they
Gives them time to breathe and think and reshuffle things.
Yeah.
Get back in line with things.